Good afternoon, everyone, and welcome to STACS Day. This is the panel on the road to commercialization for DLT in the capital markets. My name is CJ, and I'm the Strategy Director for STACS. STACS has done a lot of work in the capital markets technology space. We are working with the financial institutions to digitalize assets, processes, and documents, and we are joined by some of our partners together with us on this call today. Now, I'm very excited by today's topic, not just because the road to commercialization is a very timely topic, but more so because we have a very exciting and interesting lineup of speakers with us today. Now, before we start, for the benefit of the audience, if you have a question that you would like to ask, please drop the question into the right-hand side of the browser, and we'll attend to some of these questions towards the end of the session. Now, I'm going to hand the time over to some of our panelists for them to give a very quick introduction about themselves, as well as the organizations that they represent. Simona from Swift, would you like to go first?
Yes, sure. Hello, everyone. So I'm Simona Cătănescu at Swift. I'm in the capital market. I'm a director in the capital market strategy team. And yeah, I'm based in Singapore. I've been in Asia Pacific for more than 10 years, having various functions and activities related to capital markets. In terms of Swift, I guess everyone knows Swift. Swift is a member-owned cooperative. We connect more than 11,000 banking and securities organizations worldwide. And we provide our community with a platform for messaging and standards. And we offer products and services to facilitate access to this platform. And in the same time to have to integrate and to communicate in a secure and reliable way.
Thank you, Simona. Jamie from Accenture, would you like to go next?
Thanks, CJ. I'm Jamie Solomon. I'm a managing director at Accenture. I've got really two main responsibilities. One is I run for our global market unit, digital exchanges and market infrastructure. And second, for the Asia Pacific region, I'm responsible for all of our multi-party system and blockchain business. I'm based in Hong Kong and have been here a very long time. No, actually, I've been here 5 months. So I got here at the end of July, but very happy to be here and intend on spending a lot of time here. Accenture, as you all know, is a very large systems integrator. We do everything, essentially. We've got around 7,500 trained blockchain professionals that cover all gamuts from strategy through operating and business case, through implementation, run, and maintain. Happy to be here with this august panel and looking forward to a great discussion. Back to you, CJ.
Great, thanks so much, Jamie. John, over to you next. If you could give an introduction of yourself as well as Standard Chartered.
Hi, thanks, CJ. Hi everyone. My name is John Ho. I'm the head of financial markets for Standard Chartered Bank, located in Singapore. Part of my responsibility is to look after the financial market business, looking after their documentation, providing dedicated legal advice. And we have a team in various hubs in New York, in London, Singapore, Hong Kong, Dubai, Shanghai. And besides the sort of execution of deal execution, we've also been looking at digitization journey with respect to the financial markets, looking at obviously some of the emerging technologies such as blockchain, distributed ledger technology, and smart contracts. And we're very excited to be on this panel to share with you some of the sort of key initiatives and trends that we see in banking and finance. Thank you, CJ.
Great, thanks, John. And we're excited to have you on this panel together with us too. Girish, next, could you share with us about yourself as well as Deutsche Bank?
Sure, CJ. Thanks. I'm Girish. I've been in Singapore for the last 13 years. I've head the business solutions for security services for APAC. Deutsche Bank Securities Services is committed to using advanced digital techniques such as DLT APIs, machine learning, and data analytics to deliver client-centric solutions and transform our suite of products. Digital techniques will be and will continue to be a key focus for Deutsche Bank to create significant value and better experience for the clients. Happy to be part of this esteemed panel and to have a great discussions.
Great, thanks so much, Girish. So I think what we have over here is we have a very exciting and interesting lineup, and the topic itself that we are going to be focused on is something that's extremely huge. When we talk about the road to commercialization, to me, that's very much a journey towards how can we actually reach the end state, right? And what really is the end state? So you'll see that over here, we have a lot of questions, a lot of themes that we want to explore. And probably the best way for us to do this is to first start off with an exploration of what are the use cases, what are the applicabilities that actually exist over here, and how have the various panelists as well as the organizations that they are representing, how have they actually been delving into this technology itself? So with that, I'm going to start off the question first with Jamie. If we can start with you, Accenture has a global footprint, and you have worked very extensively on a lot of different projects, either whether it's stock exchange led or whether it's regulators led. So could you share on some of these DLT projects together with us and some of the insights and case studies that you see?
Sure, thanks, CJ. I think, as you say, we work on a lot of them. I'll just pick out a couple, two in this region and maybe one outside. The first is I think a project we all know and some of us love and hate at the same time, which is the modernization of the Australian Stock Exchange. So ASX is on a journey to replace their legacy clearing and settlement system called CHESS, and they're using a distributed ledger technology to do that. That journey is a long journey. We're probably about halfway through. It's been challenging, and yet it has been rewarding. The participants in the region, in the market, are beginning to be excited about the upcoming live trial of that solution. I think that theme of exchange modernization is happening in a number of different places. Here in Hong Kong, we've started that journey as well in a much smaller piece, looking at a small fragment of the market. It's Northbound Stock Connect. And if you look at what's going on in the US, DTCC, again, a large clearing and settlement agency, doing the same thing. They're 3 projects into their journey. So what we see is now the realization of the future where an infrastructure will be in place where all trades can run through on a distributed ledger, not only trades that are securitized or tokenized assets, but even regular assets like stocks and bonds as they settle and clear using this new exciting technology. And the benefits we see are absolutely staggering, and we can talk about that as we go forward. Back to you, CJ.
Thanks, JB. The next question, I'm going to post this over to Simona from Swift. And this is something I think Jamie touched a little bit upon just now when he mentioned one word. And that word is infrastructure. Now, Swift, as we know, is the underlying financial markets infrastructure that served the entire financial industry for the past 50 years. You went from no technology to some technology and now to new technology. Now, how does the concept of DLT fit within this? And are there any use cases or case studies that you can share with us?
Right. So if you started Swift as a platform and moving to a new technology, maybe I can mention an important part of our strategy that we announced this year, and that is Swift platform going beyond financial messages, in the sense that we will provide a comprehensive transaction management system. What does it mean? It means that the platform, for example, will maintain a full transaction data in the center. There will be visibility on the trade for all parties. A trade settlement status, for example, will be made available to all parties in the chain at the same time. So, of course, there are benefits from there that we derive from there in terms of capability to be proactive, to prevent exceptions, the idea that we notify all the parties in the same time, so it requires less reconciliation effort. And that platform, the new platform, will orchestrate the interaction between all the financial players in the chain. To mention here as well is the fact that the data will be kept in ISO 20022 data elements. So we keep rich data in the center, in the platform. However, each participant can connect with the protocol or format they want. So it can be API, it can be MT. However, we maintain the data in the richest format, which is ISO 20022. And now to answer your question, how does it link onto other DLT platform, is another feature of this platform that we are building is the fact that it will be an open ecosystem. It will be an interconnector of platforms and vendors. So by means of APIs, for example, we will be able to connect to any other platform, inclusive DLT platforms. And I don't know if you'd like me to go ahead and, building on what Jamie said. It's when you think of a CSD or think of a scenario where the custodians that participate on a CSD, and that CSD has a DLT environment, for example, there is a token exchange on that DLT environment, but that exchange is always two-sided, security token as well as cash, right? And Swift comes in the picture when we think especially of cash in this scenario, in the sense that, yes, we know there are digital currencies, CBDC, very important enablers for the DLT technology. However, we are not always in possession of them, and there are many jurisdictions that still require fiat currency settlement to recognize finality in settlement. So that's where Swift comes in the picture with the ability of connecting to this tokenized platform and settle the cash side either in RTGS system like MAS in Singapore, or cross-border through what we call GPI, the Global Payment Innovation Initiative of Swift, which also has an instant part. So instant GPI bringing settlement to a few seconds. And this is the theoretical case also with which we work with you, with STACS, to prove this link between a tokenized platform and the Swift rails.
Thank you, Simona. We ourselves are also looking very much forward to how can we connect together with Swift too. You touched on some very interesting points, which I want to address subsequently, but just to float some of them with regards to new strategies, looking at new operating models and new interconnectivity. I think that these are all very exciting keywords that we will subsequently explore during the latter half of this panel discussion. Next, I'm going to invite John from Standard Chartered. I noticed that Standard Chartered has done a lot of work in the DLT capital market space. And personally, I do know that you have also led some of these endeavors. Are you able to share on some of these case studies and also the insights?
Yeah, I think just one that is things that is industry in, this relates to the UBIN phase 4 that was done about more than a year ago, where it was an initiative led by 3 central banks, the Bank of Canada, the Bank of England, and the Monetary Authority of Singapore, where they jointly assess the cross-border payment versus payment sort of infrastructure and look at a couple of scenarios and alternatives. So obviously one of the scenarios they looked at is to look at could we enhance cross-border payments and settlement using distributed ledger technology, although the focus wasn't about solely distributed ledger technology. But I think one of the sort of scenario they looked at in the joint report that was subsequently published was to look at what are the existing challenges in the payment space, especially cross-border payment. Simona mentioned about GPI, and most recently the FSB, Financial Stability Board, have also commissioned a report and obviously mentioned that cross-border payments and settlement remains a global issue for market infrastructure, financial institution users to sort of resolve, partly because it remains fragmented, it remains expensive, and there's obviously different standards, and it results in a more expensive proposition when you actually try to make a cross-border payment that are high value in nature. So I think the sort of project Ubin 4 looks at improvement in speed, cost, and transparency using a DLT. And I think what they do say is, look, among the other payment models, DLT could be explored. But having said that, it requires investment in it. It also requires robustness and resilience in the system. As we note, when you adopt new payment systems or innovations in payment, it does comes with it additional new risks that needs to be understood, it needs to be overcome, but doesn't mean that we shy away from it, because the future of finance is likely to be the trending towards more adoption of a digital platform, digital mode of payment. The other aspect I'd like to discuss in relation to this is context of a regulatory sandbox that I was part of a core team that we ran together at the sort of Financial Conduct Authority, FCA, in the UK. We look at the proposition of programmable money. In this context, we look at a context of a deposit that is done in a digital form, whether it could meet the sort of requirements of access to consumers, ease of use using a mobile app, and also simplicity in structure such that it does behave and replicate and looks like a bank deposit. The key difference that the bank deposit is done in a cryptographic and tokenized format. So we also deal with looking at how do we deal with anonymity, how do we deal with consumer protection. That was obviously, but the focus for the sandbox was to test the hypothesis and also to test the regulatory interpretation that could we potentially have a banking product in its form that it is could be conducted or done in a digitized form. And I think the outcome, a result of that was promising, because we had a few use cases during the sandbox, and the result shows there was actually a network effect. So the fact that you could have deposits and people do feel a need to sort of make transfers, do feel a need to sort of reallocate their monies for balances. And the sort of result does show that this creates new banking model, creates new asset classes in a digital form. And it is something that the world, when we post-COVID, is likely to be that most people will still adopt digital payments, alternative mode of payments other than your brick and mortar banking.
Great. Thanks, John. And what I like about that is that, what we have seen so far from what I'm hearing, right, is we see some signs of success, some small areas of a kind of what we call proof of commercialization or proof of concept, small scale pilots. But at the same time, we also alluded to that there are certain things that we kind of have to be aware of, certain things that prevents us from actually going more into scale, moving more into production. And we'll touch on some of these points subsequently later. But Girish, if I go over to you, could you share on some of Deutsche Bank's experience with DLT in the capital markets? And I think that was also something that Simona touched very briefly about previously when she mentioned about the role of the custodians within a security settlements, a transaction. Girish?
Sure, Shiji. I can just refer to about a project Banja, which I kind of personally been involved. Basically, it's an MAS STI project where we're working on a proof of commercialization initiative between Deutsche and STACS, and we do have other collaborators like UBS and Union Bank of Philippines. The whole idea is to determine the DLT applicability in the capital market in a very realistic manner. The objective of this proof of commercialization is to identify platform functionality and capabilities and technology. How does it get interoperability with other platforms? And finally, looking at it from a commercial as well as more from a legal feasibility review. Right? The focus has been more on the asset tokenization, transparent record and reporting, and looking at how do we operate it with other payment options like Ubins and Libra. We are really very excited about this progress made. We are looking forward to kind of getting into kind of final stages. The other project, maybe very high level, I would like to touch upon is how we have used we are exploring using DLT in the SRD2 space in Europe because it's got more of a regulatory impact where we need to identify the ultimate beneficial owner. So Deutsche has been working in this space for some time.
Perfect. Thanks, Girish. So, if we go to the second theme, right, which is, and again, if you go back to what is the topic of discussion over here, right, when we talk about, at the end of the day, what is the road to commercialization over here? At the very start, the hypothesis was always about that. When we first dealt with DLT, the hypothesis was, would DLT actually disintermediate away the financial institutions? And obviously, from the various case examples and use cases that have just been shared, we have proved that this is not the case, right? So what we have now over here is we have some use cases, we have some moonshot vision, but subsequently, what are some of the kind of gaps that exist? What are some of the hurdles that prevents us from moving forward? And at the same time, how can we ensure that, as we move further along, how can DLT also coexist together with the capital markets? So Girish, I'm going to pose the first question to you and to pick up from where you left off. Deutsche has always been big fans of market and industry-driven solutions. And you also mentioned earlier about the need for APIs, for digital techniques, and also things like interoperability. And now, especially, you're also a big advocate of using DLT technology. Where do you think is this secret sauce of coexistence between the DLT technology, between interoperability, between some of the digital techniques, as well as the existing capital markets business that Deutsche runs?
Sure. COVID-19 has kind of given the financial industry an opportunity to adapt itself and fast forward the development of various technology, right? This disruption has resulted in banks accelerating a number of initiatives. Deutsche Bank, as I mentioned earlier, has been committed in using various advanced digital techniques like APIs and data analytics and machine learning. We are confident that by successfully navigating this technology, we can reduce the latency, improve transparency, as well as kind of improve the overall client experience. Maybe some of the more extensively, while we are still continuing our exploring DLT, we're extensively been using APIs and data analytics. Some of the examples that I could share with you guys is we have used APIs to provide real-time cash information to our clients. This kind of solution helps the clients for a better cash forecasting and liquidity management. At the same time, from a custodian point of view, we have been able to provide real-time trade statuses through APIs and chatbot. We have partnered with Symphony to increase the efficiency of multi-party communication. We have used data analytics to analyze intraday liquidity, allowing clients to optimize their available cash balances. And lastly, we are kind of achieving settlement efficiency by providing real-time dashboards to clients. Digital techniques like DLT, APIs have been continues to be a key focus for Deutsche to create a significant value. And we're hopeful that DLT would also become a significant enabler in years to come. Back to you, CJ.
Great. Thanks, Girish. The next question I have is for Simona, and just to pick up on some of your earlier points, when you mentioned about new strategies, for example, and you talk very broadly about how Swift is looking at how can you enrich and go beyond just messaging, right? Now, at the same time, what we have seen is that some people, a minority of people, right, they've floated the idea that the DLT itself could potentially replace the Swift infrastructure. And some of these thoughts, right, some of these ideas come about when we talk about how a blockchain-based ledger, for example, with transparency, with visibility in the transactions, and also your real-time settlements, all of this all comes into light, which sounds very much similar to what Swift is doing. So in this case, right, from a Swift perspective, Simona, how would you actually reconcile some of these views, and how would you ensure that there is a coexistence of the DLT with the capital markets?
Yes, this is a very good question. Where to start? Okay, so for me, when our clients move into a new technology, there are two scenarios, right? The first one is when they decide to render the previous technology obsolete, and that's what we call a revolution, right? There's a second scenario where, in fact, they want to enable the new technology to coexist with the existing one. Yeah, so they'll plug into the existing ecosystem, and that technology change is additive. Yeah, the incumbent technology and the new technology evolve together in a natural way, and they complement each other. For Swift, being, connecting 11,000 institutions and having such a scale, we always believe in the second scenario, where there is a coexistence. And we need to offer our customers that coexistence. We are keen in this coexistence. Of course, when you bring a new technology with an incumbent technology, you create lots of fragmentation. Yeah, and that fragmentation, in fact, is present between two DLT systems or several DLT systems. But the fragmentation appears also when you try to connect a new system, a new infrastructure with the current one. So the big question for us is also, how do you decrease that fragmentation? How do you standardize so that we can ensure that interoperability between DLT platforms and the existing SWIFT platform? And of course, that's where the SWIFT standards and the ISO 20022 come into the picture, and our role of enabling this standardization and interoperability.
Perfect. Thanks for this, Simona. I caught a few more words, a few more key points and catchphrases that I keep hearing throughout the panel, and we'll subsequently touch on some of these when I hear about things like interoperability, client-driven solutions, market-driven solutions, ecosystem participants. We'll touch on this subsequently later, but the next question is going to go to John. John, given the work that Standard Chartered has done in the MES project Ubin Phase 4 as well as the UK FCA Sandbox, and I do know also that you work quite a lot with the regulators as well as the global associations. So you must also have some thoughts on how can the DLT itself actually coexist together with the existing capital markets.
Yeah, I think a couple of things as what Simona have highlighted. I think I'll just break it up to about 3 themes here. One is we should have a consistent legal and regulatory framework, because right now there is no global legal and regulatory framework to look at what is to regulate sort of the blockchain technology and how does it sit in the context of capital markets. Just to give it an example, if you want to tokenize a particular securities, the classification of a particular token as a security token, utility token, or payment tokens is still very much fragmented, i.e. some jurisdiction does have a clear path in terms of classifying into those buckets. In some jurisdiction, they treat all digital tokens in one bucket and debug and ban those from use, with the exception of utility tokens. And I think we probably need some sort of a convergence, a global standards that before we can achieve any sort of a mass adoption on a very big cross-border basis. So the other thing we also need to look at is consistency of terms, taxonomy. So what parties talk about, even terminology of blockchain or DLT means different things to different people. We had pleasure of looking at different legislation, and I could tell you that just the definition of DLT and blockchain means different things to different people. So I think we should also make sure that there is some sort of a consistency approach. And the third thing is what the Financial Stability Board and the Bank of International Settlement are doing is to advocate the same level playing field for traditional financial institutions adopting tech, especially in the context of the enterprise blockchain, as opposed to also the big technology firms trying to enter the space of financial services. Is this principles of proportionate regulation and the principle of same level playing field, as I mentioned, under the mantra of if you're doing the same business, you're subject to the same risk, you should also be subject to the same regulation, regardless of whether you call yourself a FinTech, you call yourself a FI, you call yourself a big tech. If you're doing the same activity with the same substantive risks, the regulators are now saying you should be subject to the same risk, whether it's prudential risk, capital requirements, and the like. So there are things to put into perspective. Just give you an example for audience. I mean, I go to high level, but just yesterday, the European Commission have sort of issued a public consultation on CSD, which Simona mentioned. So CSD is crucial because, as you know, currently CSD is required for a lot of our security issuance, CSD also been used to dematerialize and custodize a lot of the global assets in capital markets and in global markets. However, the current rules, especially if you look at the European CSD regulations, doesn't sit well with the DLT framework. What do you mean by that? It currently connotes that, you know, in order to be recognized as a financial instrument, you need to have an approved CSD license. In a decentralized or even centralized sort of blockchain or DLT environment, there's an issue is who needs to be licensed, which entity needs to be licensed. And then in the context of DLT, currently the CSD regulations connotes that you need double entry to recognize for book entry or transfers. But as we all know in DLT, if you're a single source of truth, there's no concept of a double entry. So right now we have legacy regulations and systems that doesn't tie very well with the sort of fast, rapidly evolving technology. And I think what the regulators have now realized to say, let's see how do we conduct a conducive environment to enable innovation, but at the same time amend regulations that is progressive, that is forward-looking, rather than regulations that are currently fit for purpose that was built for the past. So I think what we are looking at is a more agile and progressive regulations, which regulators around the world are now sort of catching up and inviting entrepreneurs, tech companies, financial institutions to sort of look at a solution. And I do think there's a lot of private and public sector collaboration in this aspect. It's still early days, but the trajectory of collaboration is very promising in that hopefully we will come to a happy medium of a solution that enables innovation, at the same time able to mitigate any new risk that evolves.
Great. Thanks for this, John. And I also saw the same news that came out from the EU yesterday. And, you know, some of these are also things that we have been trying to solve, you know. Being that when you mentioned about the regulatory certainty, you know, in the DLT world, right, the DLT is the CSD, but obviously that doesn't happen in the conventional world. And if you talk about other things like when you mention about double ledger and say for things like paper certification of bonds, right? In the DLT world, we don't have the concept of a global node for a bond. We only have the concept of a token. So how do you actually reconcile some of this? So I do think that these are all very, very interesting topics and things that we subsequently have to overcome. And we can probably explore this in the next question. But finally, just to round out this team, right? Jamie, the next question is to you. Given the experience that you have always been working with the other financial institutions, what are your views on how DLT can coexist together with the capital markets?
I mean, I'll be honest with you. I think it will eventually become capital markets. Our view is very much, not today, but not too far in the future, that DLT will be the centerpiece of capital markets. And we think whether it's the exchanges pushing up, as you're seeing Hong Kong, Australia, DTC doing, whether you see each of the central banks that are on their journey, some faster than others, whether it's Riksbank in Sweden or whether it's SEPs in China, we are going to be in a world with central bank digital currency. And when we're in a world where central bank digital currency exists, where exchanges have been modernized so that they can accept tokens as they can accept anything else, as private exchanges start, or as even governmental exchanges like STACS in Switzerland start, we're going to be in a world that is driven by a blockchain world. The one thing I think we should challenge ourselves, how do we get there? If you look at how we're going right now, the way people are moving forward is institutions that control a market, like ASX, they move forward and they take their market with them. How do we, as non-exchanges, as non-central owners, again, central banks can force you to move forward to use central bank digital currency as they implement it. But how do we as institutions who aren't owners of the market, how do we come together like other industries have done, like the insurance industry in the US has done, to create essentially a consortium of peers to drive the change ourselves? And I challenge our panel to think about how we do that. Back to you, CJ.
Thanks, Jamie. It's actually a great opening for our next theme, actually, which is on, we started off first with what are the use cases, what are the moonshot visions that we have, right? And in the second theme, we gotten to be more realistic. We started to bring the adults into the room, and we said, there are certain things that we can do. We started off first with a sandbox, for example, and there were certain things that we can do, but subsequently we had to be more cognizant of the way the capital markets actually operate, and how can we find areas of coexistence over there, right? So the next question then, I'm going to pose this to John. You talk about certain things like, for example, the need for a framework, the need for taxonomy, the need to work with regulators and to level the playing field, right? Apart from this though, are there any other gaps to commercialization that you see? And perhaps how can we actually, well, as Jamie suggested, how can we actually overcome some of these gaps?
Sure. Good question, yourself and Jamie. Apart from obviously the regulation I just touched on, there are obviously the current state of where DLT or blockchain are, as you note, one of the sort of issue we talk about is scalability, speed, right? Obviously, there has been a lot of improvement the last number of years with different networks creating and enhancing speed, but some of them do it at the price of compromising on security. So is that thing about making sure, can you get speed? Can you also achieve the sort of security that we normally enjoy in a sort of banking system at the moment? The other barriers to sort of mass adoption that we see now that needs to be addressed is this point that Simona highlighted, is the issue about interoperability. With different blockchain networks, at the moment, some of them using different consensus, the kinds of interoperability we see is not frictionless at this point. It contains a lot of friction. There's a lot of new evolving solutions right now in terms of building what we call a DLT or blockchain bridge that connects between, let's say, a Hyperledger fabric with Ethereum in Corda R3 and vice versa, any other sort of network out there. But however, a lot of these at the moment, we haven't seen a lot of sort of scale, partly because we are still in the early stage of trying to resolve the interoperability issue. And I think it's also timely this week that at the Singapore FinTech Festival just this week, the Deputy Prime Minister, Mr. Heng Swee Keat, have actually announced the establishment and launch of the Singapore Blockchain Innovation Program. And he cited two reasons for that. One, to do more research to enable a more enterprise or more robust enterprise blockchain network, and also precisely to solve two issues, interoperability and scalability. He actually cited that in his speech. So that remains an issue to date, but it's not insurmountable because technology is improving, parties are working together. But I would say that this is something that parties need to solve. The other fourth point is cost, right? So adoption of new technology does come with it investment in costs. But obviously, when you have scale in terms of repeatable activities, that could be recovered over time because when you do that, it lowers the cost of adoption of new technology. So if you look at how the mobile technology got adopted, initially it was very expensive, and where we are right now, it is so commoditized that the cost is sort of minuscule compared to its original investment.
Great. Thanks, John. I keep picking up this word over here that's called interoperability, right? So I'm going to address the next question over to Girish. Given that from a custodian's perspective, right, you service multiple parties and you're an integral part of the capital markets, how important is this interoperability piece over to you? And is this the key thing that prevents us from moving into production?
Thanks, CJ. Well, there are lots of positives, drivers of DLT, and obviously the change is inevitable, right? But there are certain gaps, like once I think everyone touched upon it, standards and interoperability, right? The difficulty that we've seen currently is how do we establish the common market standards and interoperate with various platforms? The important is how do we connect to the various payment options? At the end of the day, what it means for the end client, right? Would it mean that by having so many platforms, does it increase the cost of seamless integration with their back office system? Might impact the value that we bring to the end client? At the end of the day, what is the value that we would want to deliver to the end client. The other gaps that I see is a couple of them that I would like to highlight would be more on knowledge gap or lack of awareness, right? So currently there is a lot of insufficient skills and knowledge for lots of firms to accept, adopt or develop or implement the whole technology. There are lots of gaps, right? People talk about DLT, but we still see there are lots of gaps within the organization about the framework of DLT. And lastly would be how confidence building, right? How do we build confidence, like financial institutions like Deutsche work with the regulators to kind of demonstrate that the processes and outcomes are compliant with the regulatory framework that they have put in. So it's kind of a process that we might need to, as I mentioned at the start, there are certain gaps, but yes, the change is inevitable. So we would have to be prepared.
Thanks, Girish. The next question then goes to Jamie, and in fact, I'm going to pose 2 questions to you, just to tap on some of the insights and the sharing that the various panelists have given. So earlier today, Jamie, you mentioned about a few projects that Accenture has already been involved in. Now, how many of these projects have already moved into production, or are they ever going to be able to move into production, or is it just that the technology providers like ourselves or the consultants like Accenture, are we just trying to push a solution? So that's the first question. And the second question, which is, you mentioned about the need for, what we term as structurally important financial institutions like your stock exchanges, or strategically important financial institutions like your central banks, like your CSDs. If these guys never move into the DLT space, then how can we bridge some of these gaps to commercialization?
Thanks, CJ. So in answer to the first question, we have a number of projects that have moved into production in significant industries like the property and casualty insurance industry in the United States, where 43 of the largest companies have come together to start to drive transformation by the use of distributed ledger technology. There are other examples in Great Britain. There are other examples in Europe. So there are examples here in the region. In Thailand, the one-bet bond is in production based on a distributed ledger solution. I think that more importantly is, to your point, the systemically important institutions like the Australian Stock Exchange. They've committed their business. They have bet their business that this is going to be the technology of the future. Are they in production today? No. Are they on a well-publicized journey to get there? Definitely. And like I said, they'll be entering customer trial middle of next year. So they're on track. I guess to me, the important point isn't whether or not those institutions are going to move, because I believe they clearly are. They've spent a tremendous amount of money and they will continue to do so. I guess it's, what are the things that are preventing the rest of us from following along? And I think that what John said, I think is part of it. I think that the concern about scalability, I would argue that concern has been largely addressed at this point. If you look at the published results at DTCC, they've run a sustained benchmark managing their 115 million trades a day. So they run at a sustained rate of about 6,800 trades a second. Is that in production? Absolutely not. And I think one of the key things that are missing is not just performance, but all of the other non-functional requirements, whether it's auditability. And clearly, DLTs or blockchains are auditable, but how do you audit them? Compliance, security, all of the elements that we have to have in order to get anything into production, whether it's DLT, whether it's AI, whether it's MVS and COBOL. There's a set of non-functional requirements we have to be able to meet. And that has been one of the sticking points in getting DLT solutions into the marketplace. All of the work, not so much on the functional side, but on the non-functional side, to get all of those elements met to the satisfaction of the CISO at Standard Charter or the CPO at Deutsche Bank. Those are the things that we have to get across the finish line. We're close. We've gotten across the finish line at places like State Farm and at USAA, but we have a lot of work yet to go.
Thanks, Jamie.
Can I add something
yes,
here?
Go ahead, Simona.
What Jamie mentioned made me think, maybe remember a paper that we published together, Swift and Accenture, years ago, where we took each of these features and we, like security, trust, traceability, we took it and we compare how do you achieve it on a traditional technology versus a DLT, and what do we as a community need to do to evolve that feature to be mature and to be provided in the same way onto a DLT system. So that's what I wanted to mention. We had that paper together with Accenture, and of course there we concluded that there are already existing clear efficiencies like trust in a disseminated system. It's there, mature, like efficiency in broadcasting the information, or traceability, or simplified reconciliation. So those were features that were already mature on a DLT environment. But there were others, as Jamie mentioned, that had to be evolved and progressed.
Yeah, just to add to that, I think Simona and Jamie mentioned, I think I agree. Just to answer your point, I would agree that the non-functioning aspect is still a work in progress. Having been involved now, I can tell you that, how do we book a trade, digital assets trade? How do we put in a balance sheet? And what's the tax regime? What's the prudential treatment is still very much depending on jurisdiction. Some of them in advanced stage and some of them are not in advanced stage. So the question is, the building blocks needs to be well in place before the whole ecosystem matures. And I think as some of the building blocks, as we mentioned, whether it's functional component, non-functional component, that is being filled. Like if you look at a board, some of the sort of squares are being filled. However, not all squares are being filled. And until and unless those squares are filled, then we'll probably be in a much mature state to see, an end-to-end process. But like you said, the traction is there. Hopefully with private and public sector collaboration, we would see that in a much shorter time frame than one would expect.
Thanks, John and Jamie. And I was actually going to post this last question over to Simona, right? Some of which you already touched on, which is that some of the panelists, they touched on the roles of regulations. So John, for example, mentioned that in different jurisdictions here, different regulations, and it affects the way that the security tokens, for example, are being treated, or how the payment tokens are being treated. Girish, for example, talked about the need for interoperability, for having multi-party ecosystem participation or client-driven solutions. And of course, Jamie talked about the need for security, audit, or things like essentially your non-functional requirements and your standards, right? Now, from a Swift perspective and your experience, of rolling out the ISO 20022 standards and solutions, and being a cooperative that essentially services a large part of the financial institutions, what then do you think is the role of Swift in helping to facilitate some of these conditions, in helping us to keep us over the board and getting us closer to the finishing line?
I think that the most important role that we can play here, again, is standardizing in order to help everyone achieve scale, if that's what the community wants. And when I mean standardizing, I'm thinking of a rich standard like ISO 20022, because it's, first of all, it's technology agnostic. So you can use it on a DLT, the data elements, you can reuse them on a DLT technology as well as a existing technology. So that means you create that interoperability. It is there. It is a global and open standard. It's widely recognized as the standard of the future. Is the de facto standard for financial transaction. And it is flexible enough to support all these emerging technologies and to be embedded in an API call, for example, or in a smart contract. Smart contracts can also be built with data elements of ISO 20022. So I think that's an enabler that we can offer to the market in order to achieve scalability. And then again, as I mentioned before, for me, the success in commercializing this technology is about scalability. How do you achieve that scale?
Thanks, Simona. So, what we have, right, is we spoke about use case, we spoke about applicabilities, we spoke about the moonshot vision, and subsequently, how can we be realistic and actually move this further towards the finishing line. I think these are all really great conversations. I'm just staring at the Q&A box. I think we have about 6 to 7 questions there already. So I've chosen a few that I think is a bit more interesting, and I'm going to ask. So with regards to the first question, and this is something that I think Simona touched very briefly upon, and also Girish, with regards to new strategies, new operating model, right? So with a platform operating model in the DLT capital markets, does it mean that the incumbent exchanges already have the advantage to dominate this space despite fintech innovations? And if that's the case, right, how do we actually mitigate a dilution of competitiveness if going by a platform-based model, it means that the winners takes all? Jamie, I'm going to pose that question first to you, because I think that touches very much on the piece about systemic important institutions.
Yeah, I think it's really interesting questions, CJ, to be honest with you. I think today, no one has necessarily a distinct advantage. Clearly, if an exchange moves, they're the incumbent, they have the right to lose. But you see lots of places in Switzerland, for instance, the Swiss exchange decided not to. They decided to create a native digital platform themselves called STACS. In other markets like Singapore, I think there are now 2 or maybe 3 registered private exchanges. So if the exchanges move quickly, they will remain the dominant players, because at size and scale, it's be really hard to beat them. If they have a platform that can offer tokenized financial asset transfers, issuances, secondary markets, they're going to remain the dominant player. But if they don't, there's tremendous opportunity for either other institutions or players out of left field to come in and actually take market share. So it's definitely not game over from my perspective.
Thanks, Jamie. Girish, I'm going to invite you and to see whether you have any thoughts on this. Given that at the end of the day, you have the exchange, but you also have the custodian players that comes into play. Do you have any thoughts on this question, and how would you like to respond to that?
Yeah, thanks, Jay. Basically, I see what I see is that how quickly the participants or the stakeholders would be able to reorder their structure and dynamic, right? So basically, how quickly would you be able to adapt to the change? If you, as Jamie mentioned, right, how quickly the stakeholders would respond to the change. If you're quick enough, you have a chance in the game, right? If you take your time and you feel that the traditional way is going to stay for a long period of time, then I guess you're mistaken. But yeah, the change is inevitable. That's what
Perfect. Thanks, Girish. I'm just going to share a personal example of one of the projects that we have worked on, which kind of touches on this. And in this case, it was actually beneficial for us, given that we were directly working with the platform operator or the stock exchange in this case. So I am actually referring to the example of Bursa Malaysia that we worked with. And just to share, as the stock exchange, it does sit in the middle of the capital markets. And when we first went out together, right, when we spoke to the different 13 or so different investment banks and brokers that exist in the Malaysian capital markets, the reception that we initially had was not that receptive. But subsequently, as we progressed along with just 3 investment banks, subsequently you began to see, more and more people started to say, hey, there's a huge party over here. It sounds pretty exciting. There's fireworks, there's drinks, there's alcohol and everything. Now we want to be part of the party too. So yeah, I definitely agree with you, both Jamie as well as Girish, that it's just a matter of time. Of course, the stock exchange itself or the platform operator does have a distinctive advantage, but it doesn't mean that other people can't kind of join the game. Now, my second question then, which is that, we have always been talking about the positive side of things. We talk about the use cases, the visions, and we also talk about the realistic piece of things, right? But have we then considered the negative side of things, which is, and this is a question then that comes about, which is that many of us say that blockchain is the key to shaping the future of financial ecosystems, but does it have a potential of negatively impacting the financial institutions? Given that we have two financial institutions over here, I'm going to pose the question to John first, and then subsequently Girish, if you want to jump in, as well as Jamie, as well as Simona.
Sure. I think the question is a good one. The question is whether the use of DLT or innovation has a negative impact on financial institution. I think the short answer would be, it depends on what we do with that disruption or the innovation. As you note, a lot of international or global international organization or financial institution are also going digital. So the question is, what do we do with innovation? What do we do with new technologies? Do you adapt? Do you try to make it work? Do you make yourself relevant? Or are you just going to continue in the same business model? So obviously, in the former case, if you adapt, you create new business model, new multiples way of generating revenue, and also being relevant. And I think for those institutions in that bucket, they are likely to flourish in a sort of a very rapidly evolving environment, as opposed to an institution that basically holds to is try and tested route of doing business without changing, without adapting. And I think they will be, difficult for them to thrive. You could see it in the context of Amazon, right? Look at 20 years ago, who would have thought that an Amazon that sells second-hand bookstore is going to be one of the largest global companies in the world with $1 trillion capitalization, because they adapt, they know the power of technology, and they move ahead. Similarly, the same here as well, because I think the lessons learned from all these is that no one can rest in laurels. Change is constant, and I think it's important for initiatives to stay relevant, to adapt and embrace change. Thanks.
Thank you, John. Girish or Simona or Jamie, do you have anything to add to that? I'm guessing no. I have one other question, which I think is pretty interesting. This touches very much on the piece of news that John shared about that came out from the EU yesterday, which goes, it seems that if regulations don't change, it is very hard for DLT to move into production. For example, when it comes to depository rules, if the depository is not under DLT, doesn't this then affect the way that digital securities can be cleared or settled? John, I think this question is directly relevant for you too, if you like to take that.
Sure. I think if you look at the European regulators, they are very much aware of the current set of rules with respect to CSD, with respect to tokenized securities, that doesn't sit well with current regulations. What they have done in September is to release what we call a proposal on the European digital strategy. One of this is a proposal to do what we call a pilot, i.e. if someone else have an idea in terms of trialing certain ideas like tokenized securities or anything to do with enterprise blockchain, they could technically, once the rules in place, apply for what we call a regulatory sandbox. They don't call it a regulatory sandbox, they call it a pilot project that could last for a number of years, that you could test your hypothesis in a very controlled environment with support from the regulators. So that to me is a step in the right direction. The other question that we're doing is, what do we do with the current regulation that doesn't sit well with technology? That is something that regulators in the region, in particular in Europe and even in the US, they're trying to work themselves out in terms of coming up with a set of regulations that is progressive and set of regulations that is not wedded on the current financial system or the final regulations. But as we mentioned, the journey is one that will take time. But what they're trying to do is a combination of, in some countries, coming out what we call regulatory sandbox. In the US, there is some concept of a no action letter from the SEC for some of the pilot projects that we have seen in terms of DLT or tokenized securities. So they are trying to enable innovation at the same time, making sure that rule change takes time. But I think the more this experiment gets out there, I think the lights will shine in front of regulators that they need to change.
Thanks, John. We are running out of time, but I do have just one last question, because it does look pretty easy or pretty hard, depending on individual perspective. So I'm just going to ask it, and if I can ask the various speakers to limit your responses to at most 3 or 4 sentences, which I think is quite long, given the question, which is how much time before we see a mainstream adoption of DLT technologies in capital markets? Jamie, given that you made the statement that DLT would be the capital markets in future, I'm going to start off with you first.
What was the exact word before DLT did what to capital markets?
How much time before we see mainstream adoption of DLT technologies? Yes.
Mainstream will depend on the jurisdiction, but 12 to 24 months.
Great, great. Girish?
I guess, as I mentioned earlier, right? Initially, it was like we were looking at maybe a 3-4 years or 5 years horizon, but with the help of with COVID being there, right, it has kind of fast forwarded most of the development. So I kind of agree with Jamie, right? We'll see something within like 24 to 2 years or 3 years time. We'll see kind of market adopting to various changes within DLT. And no, like as you mentioned initially about the Bursa Malaysia, right? No one wants to be left behind. Everyone wants to join the party.
Thank you, Girish. Simona, and especially given your experience with the ISO 22022 rollout.
That experience is a long-term experience. We started ISO 20022 more than 15 years ago. So maybe it's not a good comparison. I would go much shorter than that, maybe 4 or 5 years. 4 years, let's say. And again, that depends very much on how we deploy it, how we plug in the new technology into the current world we live in and we operate today. I truly believe in this interoperability as a success because that will bring scale.
Perfect. Thank you. And John, finally to you for your predictions.
I think probably my view is probably because about the earliest would be 2 to 5 years to we'll probably see some sort of adoption that is cross-border in nature. The reason I say that is in Europe, they are also coming up with digital strategy to sort of enhance its payment system. In the US, the Fed is pushing on this Fed Now service, and they're looking at a time frame between 2023 to 2024, but that's nothing to do with blockchain. But my point here is about enhancement in infrastructure, and then they will focus their attention in terms of enhancing it. How do we connect the pipes to adopting DLT technology? So if you look at their current focus, the book of works, I would say that around 3 to 5 years might be a more realistic time frame for mass adoption. But anyway, it's just a personal view.
Perfect. Thanks for that, John. So thank you so much for your time. Unfortunately, we have, as all good things go, we've unfortunately ran out of time. They asked you a few questions in the question about it. Unfortunately, we can't address. So if any of you really have an insanely burning question, drop us a note at info@stacs.io. We'll subsequently forward some of these questions over to the panelists. So once again, thanks very much to the panelists for taking the time out. Thanks very much to the audience for listening to this, as well as asking very insightful questions. I do think that this is a very interesting topic, and some of the discussion points that we have is extremely insightful. Just one last note, we do have quite a few other sessions, some of which are actually happening right now. In fact, we've taken some of the limelight away from the other session that started at 3 o'clock on impact tokens and responsible innovation. So for those of you who are interested to see what UBP, the Union Bank of Philippines, UBS, Deutsche Bank, and the Bank of Thailand has to say about this topic, just go to the agenda and you can click on this session and join that. Thank you, everybody, and have a great rest of the day.
Thank you.
Thank you.
Thank you.
Thanks, everybody.